All right, everybody. All right, so today, in today's video, I'm going to be focusing on bias. I'll talk about narrative, the first class, and this class now is about bias. So, talking about the bias aspects, we use what we call sequential SMT. This S stands for sequential, and SMT is called smart money technique. So it's just a way I use as bias sequential SMT. Without you knowing, before knowing sequential SMT, first you need to know what we call quarterly theory. First, you need to know what we call quarterly theory, and quarterly theory is something very very critical about the frequency strategy. And now let me explain what quarterly theory is. And okay, let's go for it. Now, if you look at the chart, we have different time frames and we have different charts. We have different charts for the time frames. The way I see chart on the 5 minutes is not the same way I see chart on the 1 hour. It's different. So, talking about the quarterly theory, I'm talking about how price behaves in each quarter. Yet, in each quarter. So, let me classify this. We have the yearly quarter. We have the yearly quarter. We have the monthly quarter. We have the weekly quarter. We have the daily quarter. And we have the intraday quarter. Yeah, that's the daily. And we have the micros. So, what is a quarter? A quarter consists of four different timings and four different market behaviors. So, let me use this to line into. No, it's not working now. Okay. I know why it's not working. Let me use this lining to oh god, I don't know why this thing is not working. But let me use this. Okay, we have four different quarters in the market. One, two, three, four. Alright, I think this should be good. They're all equal. Yeah, that should be kind of equal for me. So let's say this is a yearly quarter. Now, this is a yearly quarter. What do we expect from a yearly quarter? What do we expect from a yearly quarter? Let me mark the time frames for you. Yearly. Y-I-L-Y. Oh, it's upside down. What is this? Okay, this thing is already working now. It's first quarter. I believe this. First quarter, second quarter, third quarter, and last quarter. So let's take this as the price action for a whole year, right? The price action for a whole year. Let's take this as the price action for the whole of 2026 or 2025. Right? Okay, cool. So now, what is a quarter? What is a quarter? A quarter is like a specific time in price where price behaves in a specific way. So if this is a full yearly chart, so the first quarter, I'm not sure I'm going to be talking about true opens here. No, the first quarter is from January to March. Let me write it down. First quarter, going to be January to March. Which tool will I use now? The first quarter is going to be from January to March. January to March. That's the first quarter. The second quarter. Oh, what am I doing? The second quarter is going to be from April to June. The third quarter, let me mark it here, this will be from July to September. And the last quarter is going to be from October to what? October to what? December. So take this as a yearly chart. This is how a quarter is going to be. From where? The first quarter from March to June. So from January to March. Second quarter, April to June. Third quarter, July to September. Last quarter, October to December. So now, talking about the quarterly theory, each of these quarters have a specific way of behaving. And the way of their behavior leads us to what we call the AMDX model: accumulation, manipulation, distribution, or reversal. So accumulation, it means that, let me delete this kind of price action. Let's say January to March accumulate. Maybe you see this kind of price action from January to March. This might not likely be the case, but sometimes January to March accumulation phase. You get accumulation phase. Accumulate A, that's the A accumulation. Then from April to June, you might see what we call the manipulation phase. So in the manipulation, it's just like price comes, manipulate. That's all these previous previous quadrant highs. It manipulates it. After manipulating, then the next quadrant is called the distribution. After manipulating, the next quadrant distributes AMD. Then the last quadrant is called X, AMDX. The last quadrant is very special. Yeah, it does either two things. It either it reverses or continues. So this is what happens: accumulation, manipulation. Mark the manipulation very well. Manipulation. Then the third quadrant, distribution, and reversal or continuation. You get? So this is how market moves in each of the quarters: accumulation, manipulation, distribution, reversal. Accumulation, manipulation, distribution, reversal. So this is just the yearly quadrant. And I'll make it simple for you. This is just for the yearly quadrant. That's from January to March, April to June, July to September, October to December. Then inside the monthly quadrant, the first week of the month is the first quadrant. Then for this, the second week of the month is the second quadrant. That's inside a monthly quadrant. Then the third week of the month is the third quadrant, and the last week, that's the fourth week. There is 4 weeks in the month. is for the monthly quadrant. You get? So that is for the monthly quadrant. No, for inside the weekly quadrant is kind of special. So for the weekly quadrant, we have Monday, Monday as the first quadrant. Then we have Tuesday as the second quadrant. The third quadrant is Wednesday, and the last quadrant is Thursday. So what happens to Friday? Friday is not classified as a is as not classified as part of the quarterly theory. You get? It's a special day. It's a non-volatility day. You get? So this is what we do. This is what we call the quarterly theory, and each of these days have their own type of behaviors. You get? That is for the weekly quadrant. Now, for the daily, that's the intraday, we have the Asia session. That's inside a full day. Let's say from here to here. From here to here is a 1 day's price action. Asia session is the first quadrant. You know all the session now. Asia session, then London for the second quadrant. Then for the third quadrant, we have New York AM, and for the last quadrant, which is the reversal or continuation, we have the New York PM. So good. So one thing I should correct you, you know how price moves. I've explained how price moves with the AMDS model. On the first quadrant, price accumulates. Second quadrant, price manipulates. Then on the third quadrant, price distributes. And on the last quadrant, price either reverse or continue. So one thing I should let you know about this is that each of the timing might not actually perform its task. Let's say the first quadrant now, which is the Asia session in the HRD. There are sometimes that Asia session is not going to always accumulate. There are sometimes that New York session is not going to distribute. There are sometimes that New York PM is not going to reverse. It might continue or do anything. It might even accumulate. Sometimes London session might accumulate. It might not manipulate. So that's what we call that's what I call the behaviors of each of the cycle behavior. So one thing you should know is that not every time Asian will manipulate, will consolidate. Sometimes London might consolidate. Sometimes this New York AM might manipulate, and this New York PM will distribute. So it's not a fixed thing. So how you should know is you should know how price works. So let me take you down to the M15 time frame so that you see something for yourself. I actually use what we call this indicator. Again, I've not told you the last one. This is just for the intraday. That's Asia, London, New York AM, and New York PM. Inside this Asia session, we have 4 more sessions. You get 4 more sessions inside. Inside London session, we have inside London session we have 4 more cycles inside. Asia, we have 4 more cycles inside. New York, we have 4 more cycles inside, and New York PM, we have 4 more cycles inside. So it's cycle all the way. You get? So I use this indicator, 90-minute cycles. I know that Dai. I know the person that brought this theory, quarterly theories, Trader Dai, one of ICT's best trader Dai. You can search his name on YouTube. He's shout out to him. He's the one who created this model, one who really worked on this model, gave us real raw gems. So this indicator You can either use trader dies, just try DAE, DAYE. You can use dies on because I'm using a phone and this indicator is better for me. I can actually spot this with my eyes without using indicators, but it's more stressful. So I prefer using the indicators. So look at this now. This is where the day started. Daily A. I can mark it. This A full day's price action from here to the ending. So you might not see X here. It's arrow, that's reversal. So cool. So you can see what happened on this day. Accumulation. It's a bit of type of accumulation. Price didn't do much here. Accumulation. Then you can see price didn't manipulate here yet. It gave us now a deep manipulation. What's this now? It gave us a deep manipulation on this session. Deep manipulation before on this session we can see quite of a distribution. Then on the last session, that's daily arrow, price gave us a reversal. But if you look deeply into this daily arrow, you can see that this daily arrow actually manipulated this session. You get manipulated this session and it also accumulated a bit. So that's to tell you that it's not fixed. It's not fixed. You get it's not fixed. The behaviors are not fixed. You cannot say since it's Asia session it must accumulate. Since it's New York session it must distribute. No. You have to read it. So that's for the quarterly theory. So I think you have an idea of what quarterly theory is now. You have the yearly cycles, you have the monthly cycles, we have the weekly, we have the intraday, and we have the micros. So basically on this strategy, we are focusing on the intraday and what? The micros. Depends on what price provides for us. And I'm going to be explaining that in a bit right now. So now, talking about bias, we know what quarterly theory is now. We know how price moves. And how do we gain bias from this kind of thing? That's where we introduce what we call the sequential SMT. The sequential SMT is an SMT that occurs between two quarters. Let's say we have two quarters here. We have quarter one and quarter two. Sequential SMT happens. So now let me explain an SMT for you. Let me explain what an SMT is for you. An SMT occurs between two correlated assets. An SMT occurs between two correlated assets. What are two correlated assets? We have GBP USD and Euro USD. We have gold and silver. If you observe GBP USD, let me show you my watch list. If you see my watch list, if you carefully observe my watch list, you can see how GBP USD and Euro USD is in one pair. FX metals, you can see how gold, silver is in one watch list. This USD CAD, USD CHF, and this BTC and Ethereum. This is correlated pairs. Correlated pairs means that these assets, they look alike, they move together, they move almost the same. Let me show you price. Now look at GBP USD. Let me clear it. Let me not use it. Let me use maybe gold. Look at gold right now. Look at gold price action, right? Just take a look at it. Don't take a look at gold price action. And now look at silver's price action. There is no much difference. See my daily ranges. My daily range here. There is no much difference in the price action of silver and gold. Are you seeing it? So there are two correlated assets. You can see it takes this high. Also, silver takes this high. So that is what we called a sequential. That's what we call a correlated asset. These assets they behave like each other. Their movement is almost the same. That's what we call correlated assets. So now, what's an SMT? SMT occurs between two correlated assets. So normally, this is an advanced class. You're supposed to know market structure normally. Let's say on GBP USD, take this place as GBP USD. I don't know, my trading view is laggy. Okay. I don't know, my trading view is laggy. Let me write it down for clarity. EURUSD. Oh God, off the Wi-Fi. GBP USD. Okay, the Wi-Fi is on back. Okay, so now let's get back in business. This is Euro dollar. This is GBP USD. So now, what happens? Let's say we have market structure here like this: higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. Let me stop there. The same thing happens on GBP USD: higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. Let me stop here. So now, let's say this kind of thing happens on both correlated assets. You know, they move together. So now, what is an SMT? Let's say this occurrence. I'll best use an example. And let me first define this. SMT is an inefficiency in two correlated assets. One gives momentum and the other fails. So let me use an example to explain it. So let's say this is the market structure. And what happens on EURUSD? EURUSD creates a what? A higher high. Let me stop there. Then on GBP USD, we expect what? GBP USD to what? To create an higher high, right? But GBP USD now fails to create an higher high after this one. USD have created a higher high. GBP USD fails to create an higher high, and see what happens? Creates a higher low. This is what we call the inefficiency, the failed swing, the failed attempt to take what? This swing high. So now we can now mark this. I'll mark this as an SMT. An SMT. This is just a normal DR SMT or structural SMT, as you may call it. SMT, right? This is normal SMT. So on EURUSD, we took out this high. On GBP USD, we failed to take out this high. You get? So now, since we failed to take out this high and we have taken this high, we can expect what? Down movement. And on this correlated asset also, we expect what? Down movement. So that's a bearish example of a normal SMT. So don't need to waste time. Let me go over to what? A sequential SMT. Now remember what I said. Sequential SMT occurs what? Occurs between two cycles according to quarterly theory. Now let me make this better. My trading view is not actually premium. If not, I would have shared windows. You get, like, layout setup. Supposed to be this. So I can look at two correlated assets at the same time. But I'm not using premium right now. My premium has expired. So this is what happens. You know your quadrant. Let's say this is an intraday chart, and you see daily M from, and let's say this is daily A. This is daily A. That's daily accumulation, Asia session. Then what happens? London session comes, takes the high off. Remember, this session has a high. This session has a high. Let me mark it out. Don't put price action inside. Don't put price action. So this is what happens. This is the high of this session, right? So comes to take it and put a bit of price action here. Good. So as you can see, we took out this session's high. So if I say this cycle's high, this daily is high, took it out. Good. That's good. That's nice. But on GBP USD, what happens? See what happens. This is the daily A, right? This is Asia session. And this is what happens. On London session, see what happens. Price comes and creates the range like this. Let me put in price action inside. Let's go, let's go, let's go. Price action is good. Create a high here. The price comes like this. The Asian London session ends, and price goes over like this, and London session kicks in, and London session goes, and London session ends here. So what happened? What do you notice? We notice that on Euro USD, Asia session, London session. On Euro and GBP USD, Asia session, London session. Asia session, London session took Asia session's high, and on GBP USD, London session failed to take Asia session high. So what do we see? I don't need to tell you. SMT, not just an SMT, but a sequential SMT because it occurs between two quarters. So one thing you should notice about this SMT is that this one fails to take it. This session has to end first. You get, this session has to end first before you can now say yes, this is a sequential SMT. Why do this session have to end first? Should I tell you why? Let's say now this session is still occurring. This London session is still occurring. Good. This London session is still occurring. Then what happens? Let's say, yeah, we've already noted the SMT already. We have seen the high. Then something like this now happens inside this London session. Something like this now happens inside. Is this no longer an SMT? This is no longer an SMT again because what? Because what? This high has already been taken, and this high also has been taken. So you have to wait for the session to do what? To end first. To end first. Before you can say yes, it's a valid what? SMT. Good. So that's what we call sequential SMT. Sequential SMT occurs what? Between two correlated assets. So now, you might be thinking, how do I combine narrative and SMT? SMT is a bias model and the rest. So this is how it is bias model. Once ever we are seeing an SMT occurs, and it occurs in the right part of our narrative, we can say price wants to do what? So go down. This is a bearish SMT. This is a bearish SMT. I don't know why I like using bearish examples. It's a bearish SMT. So I say yes. Price now wants to do what? Move down. That is just an SMT. So let me try showing you how I combine these two methods, type 1 DRT and SMT together. So now you should be a beast already. Let me clear this chart. You should be a beast already in type 1 DRT if you did that assignment of spotting ahead. So now this is not just textbook setup. This is what happens almost every day on the chart. So you see type 1 DRT, price takes buy side. So I take buy side, take sell side, wait a dealing range high, does a valid displacement, collect maybe an old dealing range low here, DIA, dealing range low, dealing range low is formed, we'll mark our consequent encroachment, yeah, so we can actually say, yeah, since we have collected this DIA and we have created our dealing range low, we are in premium, right? Premium, right? So expect price to do what? Buy up to 50%. But we cannot just buy up like that. We have to wait for what? Bias. Where is the bias? Since we have spotted the type 1 dealing range, a valid type 1 dealing range on the 4 hour, we can go over to M15. That's the lower time frame. So find what? The sequential SMT. Sequential SMT. Let's say that now like this. On this is GBP USD, and on Euro USD, this daily A takes this thing out now. But on GBP USD, price doesn't take it. So can mark this as an SMT, right? An SMT, but it has to occur where in a good place, in a good position, in correlation with our narrative. So this is what will happen. Let's say price has created a swing low now. On the lower time frame, when you are looking for your SMT, you see something like this, a sequential SMT. Sequential SMT. Not this. Okay. Sorry. Let's say this is daily accumulation. That's for the intraday. And you see this happening now. Let me bring it closer. So now, this is what happens on what? Euro USD. And on GBP USD, this is what happens. On GBP USD, this is what happens. Oh, I'm supposed to mark this way. Input price action. On GBP USD, this is what happens. What do you see here? This is the low, this is the high. It took out this low and it failed to take out this low. And we can mark this as what? An SMT. Can you see it? Good. You can expect buys to here, this side. The same thing we do here. Let's say price has come to the 50% encroachment and maybe take major liquidity or interact with a PDRA. What do? Immediately price interact with the PDRA or take major liquidity. Look for buyers. So what is your bias? This happens on Euro USD. This happens on Euro USD. Let's say on daily, this is for the intraday. Intraday. This is what happens on Euro dollar. Right? Why on GBP USD? See what happens. On GBP USD, see what happens. See what price does. Oh my god. See what price does on GBP USD. Price comes on the daily A. Fails. This session fails. This quadrant fails to take the high. This is what we call a what? Sequential SMT. Sequential SMT. Buyers has formed and now can anticipate what? Sales. So where? Didn't really look. Cool. So I don't know. Let me show you some examples. Let me go over to M15, spotting an example. After I show you an example of the intraday, I will show you an example of the micros. So we either use micro SMT or intraday SMT. Cool. So now, I'm not going to include narrative on this. I'm not going to include narrative. I'll do a special session for showing you. Maybe I might even backtest it also. So let's just see. Now, if you can see now, this is daily A and daily M and daily R. I just want you to observe it very well. How is my trading view can split out? I'm using a premium. I could have split between two correlative pairs, but I can't now. So this is it. Daily A and daily R. Oh my god. What's happening to the network? Okay, the network is back. So I want to observe. I want to observe these two. I'm suspecting an SMT occurred here. Daily R and daily A. Remember, the day starts from where? From the daily A. This Asian session, more like, but this is not really accurate. So this indicator is just for the quarterly theory. So I want to observe these two here. daily A and daily R. So let me change to euro dollar. Okay. I think there's no SMT here. There's no SMT here. Look at what daily R did. It kind of accumulated. See what happened? It creates a low. This is the low, and this is the high. So daily A fails to collect the daily R's low. So if you go to GBP USD, it still does the same thing. So there's no sequential SMT. Let me find an example for you. Let me look at it very well. I have not observed the charts. I have not observed the price action. Well, no, I think I saw an SMT. Okay. I saw a micro SMT around this area. So a micro SMT, but I've not yet explained the micro SMT yet. Micro SMT is the SMT that occurs inside a full intraday cycle. You get. So let me see if I can find an intraday for you. Let me spot it. It's very easy to spot. Okay, I can't see an intraday right now. Let's go to other assets. I'm coming back to that micro because I'll show you how I entered my GBP USD setup. I've cleaned the chart already. So currently, let's see. You can see quite well. If your eyes are good, if you can see quite well, you can see that it didn't take it, right? It didn't take the low. Let's check silver, daily A and daily M. Let's check silver. What did silver do? Silver took it, right? Silver took it quite well. It took it very well. But on gold, what happened? Gold didn't take it, right? Can you see? So we can classify this as what? SMT. This SMT actually caused this displacement very well. I'm sure that's what caused this displacement. So cool. That's what an SMT, sequential SMT looked like. Lows and highs of cycles. Lows, one taking one taking the other. And I'll show you how to correlate type 1 DRT and sequential SMT. Now, talking about the micro SMT. How do you use micro SMT? I cannot just say today I feel like using micro SMT, tomorrow I feel like using intraday SMT. How do I use it? So the thing is, firstly, remember I told you about AMDX, accumulation, manipulation, distribution, reversal. When you are using micro SMT, that's where you introduce the main AMDX model. So let's say on the intraday setup now, maybe Asia session, London session. Let's see Asia session accumulates, right? Asia session accumulates. Oh, before I do this, let me mark out narrative for you first. Let me mark out narrative for you, so that it won't look confusing. You know the direction you're looking for your SMT on. I need to mark out narrative. Oh my god, network is bad. Because it's bad. Oh my god, I know what's going on here, and I cannot edit this video to cut this part out. The network is really bad here. The Wi-Fi is no longer active. Come on, walk. My phone is already 14. Okay, let's see what's happening here. Oh my god, the chat is misbehaving. Network is bad. I think I need to remove trading here. Okay, it's back on. Cool. Okay, nice. So, talking about micro SMT, let me mark up a type 1 dealing range for you to see. So you know your eyes are already good at dealing ranges. Let me put it. to this side. See this buy side, sell side comes here. So what happens on a micro SMT example? So let's see now. This is your premium, this is your discounts, and price is already way at premium, and we're expecting sales maybe from a PDRA or major liquidity. So what do we do? What do we do? What do we do? In a micro SMT example, this is what happens. This is actually what happens. Let's say in the intraday session, because we mainly use intraday on micros. Let's say in the intraday, this is Asia session. Asia session does what? Accumulates, right? Asia session accumulates, but we have not seen what an intraday SMT for buyers to shift. We cannot just wait for intraday. We can also look for a micro. So this is what happens. This is more like an accumulation, right? So cool. Asia session accumulates. So this is what happened on the next session. That's London session. London session can manipulate Asia. So this is how the manipulation works. It manipulates the high because we actually. This is why I say we need a narrative to know the way of the manipulation. It manipulates the high, and after the manipulation, we expect distribution way the downside because we are looking for sales, right? So basically, we don't want to say I want to see a manipulation of the downside on the other session, then buys. No, we want to see manipulation first. Manipulate the highs, this Asian highs. Manipulate it on where the next intraday, that's on London session, London quadrant. So we see this manipulation here. Mark it out. Manipulation, where is it? Manipulation. So immediately we see this manipulation, and remember, this is the London session. The London session is just forming, right? The London session is just forming. So what we do after we have seen this manipulation, I'm explaining the macros. This is how the macro works. So immediately we see this manipulation, we have to go into the micros and find what? An SMT. An SMT divergence between two what? Sections, two quarters inside the macros. Right? Two quarters inside the macros. SMT. Remember, we have 4 quarters. First quarter, second quarter, second quarter, third, and fourth. So this looks like what? An SMT inside of this intraday. Let me show you an example. On GBP USD, that's what I caught. So I will start from the narrative part, then it's just how I did my analysis. So I will end this video. Come on, network, don't be bad again. All right. So let me start from the daily range. This is how I spotted my daily range. Sell side, you have to train your eyes in daily range. If you are not training your eyes, please go and train your eyes. I'll mark 30 examples. Sell side, buy side. We're taking our daily range low, and basically this is our daily range high here. Remember, we can't take. Oh my god. Remember, this is not daily range high. Price have raided it. Price have raided it again. Taking more buy side, more buy side. So this is it. Our daily range high. So this is my major liquidity, more like an inducement liquidity or structural liquidity. I'll get to that. So immediately I saw this liquidity, price has tapped the liquidity, and yeah, time to go up, right? Time to go up to collect this daily range high. Now, how did I find buyers? Let's go up over to the lower time frame. Come on, chart. All right, cool. How did I find buyers? If you look at this daily A session, now it's what? It's accumulated, right? deep accumulation. Let me mark it out. This is accumulation. So your own for the macros, you just have to find a section that did what? Accumulated. Once this session now it did what? Accumulation, and I said yes, this is nice. I want to see manipulation of the lows. After the manipulation, then distribution to the upside. So this is what happened. It's manipulated. Even part of this daily accumulated. So I extended my accumulation to this side, right? Accumulation. After the accumulation, what happened? I saw in manipulation. This daily M, that's the London session, did what we call a manipulation. Oh my god, I'm lagging. The manipulation is kind of a deep manipulation. It looks like a break of structure. You get? After the manipulation, then on this daily M session, that's this daily London session now, I can now go and find what? A micro. So let me show you something. I'll go to the settings and go on the daily M cycle. Daily M, I think that should be London session. I will go on the intraday. Only so I can see the intraday session inside. Alright. So now you can see the intraday sessions inside. Let me off the other ones. So you don't get confused. Okay, cool. I was seeing we have manipulated this right now. Okay, now let's go and find an SMT. Let's go over to GBP USD. The same yesterday's price action. You can see that this low got wiped out. This low was not wiped out. This low was not wiped out. What happened? You can see that. Remember on Euro USD, this low. Let's say, let me use this one now. This low got wiped out, right? This low got wiped out. Abi, good. This low got wiped out. Now on Euro USD, that same low. Remember the green color. The green color. I seen it. It was never wiped out. It was never wiped out. I seen it. That's the micros. It was never wiped out. On GBP USD, look at it. It was wiped out. I seen it. It was wiped out. So now I can now classify this as what? Micro SMT. But this micro SMT is only valid when what? I see a manipulation of a previous session's what? Accumulation. This thing accumulated. I can now say this is a manipulated. The next session I manipulated it. I want to see a micro SMT. What happened? The micro SMT are called when price take out this major liquidity. And see what happened. I now had to find structure. After finding structure, I got my entry. I held, collected my TP. So that's how the micro sequential SMT works. That's how the micro sequential SMT works. So basically, you're seeing it, micros and intraday. One thing you should know is that narrative is a very important part of it. You see my narrative after taking this, got my SMT, my entry, and now it's traveling up to the daily range high. And yeah, that's how it works. Basically. That's how it works. So shout out to Dai, the trader who brought this sequential quarterly theory. You get. So one thing you should know is that it's not always Asia session that we accumulate. Other sessions might accumulate. Then when you see a manipulation, before you can find your micros. But you cannot just say, I want to find micros anyway. It has to be according to your daily range. For this example now, I have a bullish daily range. If I came to collect major liquidity, I saw an SMT, I got in my entry and buys up. Let me show you that silver. See what I'm experiencing on silver right now. This setup has a 75% win rate, right? See my silver setup, my narrative for silver: sell side, buy side, displacement, You get DIA, the fair value gap here, or displacement high. There's a old range here, so that's my DIA. So it came back, and now we're inside the 50% encroachment. I couldn't catch sales from here. I was currently in a losing streak of 3 losing streaks, so I was looking for high probability setup, and thank God this GBP USD setup I saw today vindicated me from the losing streak. So now I will not find any SMT here because I saw an SMT just now. I will not find any SMT. I want this low to get wiped out first. Remember I showed you an SMT now. Let me go to the lower time frame. The thing has come to our 50% encroachment and is valid for us to do what? To find an SMT. And we saw a micro SMT, a normal intraday SMT. Let me on the intradays for you to see. These guys. Let me on the intraday for you to see. I know I'm already spotting an SMT right now. Come on. Do something for me. Remember I showed you the SMT here on one correlated asset, one collected the other, and you get, so that's how it was. But me, I cannot find an SMT right now until this low, this major liquidity low is taken. It's taken. That's my rule. I see this major liquidity must be taken first before I can find an SMT. I know it took out this low. It's a major liquidity. Some traders will be on it right now. So I think there's somebody I know, somebody that is trading this strategy. I think it's supposed to be on this trade right now. Or one person on my forex groups. It's on this trade right now on the buys. So that's more like it. Then one thing you should know about this setup is the session has to end first before you can find confirmation entry. That's execution. The session has to end first. What do I mean that the session has to end first? Let's say now you saw an SMT like we did here. That's the timing model. You get? That's what we call the timing. That's where timing comes in. So now this is daily A, this is daily M, right? Okay, now the next session is about to kick in. This is the daily D. So you can see that we have a micro SMT after collecting this major liquidity. Micro SMT. And so if I say micro intraday SMT, price collected this low on this contract, while on gold, price did not collect it, right? Yeah, you saw this on gold. Cool. So now, why I say you have to wait for the session to end, I explained it earlier. So now we can now find executions now. You get? So the timing model is you just have to wait for the next session. Even on the intraday, you have to wait. I mean, even on the micros, you have to wait for the next quarter to play out before you can go for execution. And the execution is one of the sweetest parts. It's my best. After finding an SMT, you get wait for an execution. So if I want to look for an execution currently, this is what I'll currently do. I'll start the structure from here. This is currently liquidity sweep. I think this is not an entry execution video. I'll do it on the next video. Liquidity sweep, break of structure. This is what liquidity is, inducement liquidity, and basically this is another liquidity sweep upward again. Sweep, break of structure. This break of structure is not valid. So we have unfinished business here. Liquidity sweep, break of structure, inducement, and I want price to come back here, collect this liquidity. Remember this lower time frame and dish out up. You get dish out up to where? Didn't reach high. But remember what I said. I'm not finding any buys until what? This major liquidity is taken. You get? I'll see next session. I will explain how liquidity concept works. You get structural liquidity, inducement liquidity, and the rest. All right. See you on the next session.